Dealing with a number of individuals, one of the most often asked question is it okay for me to give money to my parents to help them in their retirement years? Or my parents want to give money to me to help me buy that dream house of mine. Is it okay for me to receive that money from my parents? What will be the impact of such receipts with respect to taxation? Similarly, is it okay for me to receive gift from my friends? Is there any tax that I need to pay when I receive a gift from my friends? Well, let's address the subject of taxability of gifts as a whole. The Income Tax Act states that any gift received by you, whether in cash or in kind, is taxable if the amount of gift received exceeds INR 50,000 per year. So what is important is whether you receive the money in cash or via a bank transfer or in kind. What do you mean by kind? Whether you received a gift as a fancy pen, you received a gift of a car, you received a gift of certain jewelry, whatever be the gift that you receive, if the total amount of gift received, whether in cash or in kind, exceeds INR 50,000 in a particular year, then the amount is taxable in your hand. So whatever gift you receive, you need to add the value of the gift if it is in the form of kind, or you need to add the amount of cash or the bank transfer that you received to your income, and that is taxable as your income in that particular year. However, there are 4 important exceptions to this particular rule, and those 4 are: if you receive a gift from a relative, if you receive gifts on the occasion of your marriage, if you receive gifts under a will or by way of inheritance, and lastly, if you receive a gift in contemplation of the death of the payer. Gifts received as a result of any of these 4 are completely tax-free in your hand, irrespective of the value of the gift. Let's look at gifts received from a relative and understand that a little more better. If the gift is received from one of your relatives as defined as per the Income Tax Act, then again, irrespective of the value of the gift, it is not taxable. But if it is received from someone who is not a relative and the value of gift is more than 50,000, then that particular gift is going to be taxable in your hands. Once you understand that any amount of gift that you receive from a relative is completely tax-free in your hands, let us understand who qualifies as a relative as per the definition under the Income Tax Act. As per the Income Tax Act, you can receive gifts from the following individuals. You can receive gifts from your sister and her spouse. You can receive gifts from your brother and his spouse. You can receive gifts from your daughter and her spouse. You can receive gifts from your son and her spouse. You can receive tax-free gifts from your spouse, from your spouse's brother and his spouse, from your spouse's sister and her spouse, and also from your spouse's mother and father. You can receive tax-free gifts from your mother and father, from your mother's brother and her spouse, from your mother's sister and her spouse. You can also receive from your father's brother and his spouse, from your father's sister and his spouse, and you can also receive tax-free gifts from your mother's grandparents as well as your father's grandparents. As per the law, you can receive tax-free gifts from any lineal ascendant or descendant of yourself or any lineal ascendant or descendant of your spouse. So you can see that there are a number of individuals who fall under the definition of relative. It is pretty wide, from whom you can receive gifts during a particular year and you will not have to pay any tax on the gifts. However, if you receive any gifts which are from a person who is not defined as a relative, then if the value of the gift exceeds 50,000 in a particular financial year, you will have to pay taxes on the amount received, as it will be added to your income. So a way to plan your taxes is that if you have a non-earning spouse between you as a couple, all the gifts that you receive, you can receive it in the name of the non-earning spouse, so that even if the value of the gift exceeds 50,000, they can be taxed in the name of the non-earning spouse, and if the value is actually less than INR 3 lakhs for a year, the non-earning spouse will not have to pay any taxes, and in case it exceeds the 3 lakh exemption limit for taxes, you will still have to pay a tax at a much lower amount instead of clubbing the income in the hand of the earning spouse. So next time when you receive a gift, be sure whether you're receiving it from a person who falls under the definition of the relative, and if not, what are going to be the tax implications for you as an individual or as a couple.